Hello everyone. Today I wanted to talk about the effect of strong US dollar on gold prices and if it is a good time to buy gold. I think the recent spike in the dollar index created a rare investment opportunity. Let's explore why. First, let's consider why dollar is so strong at the moment. Then, we will take a look at some charts and historical data to see if we can make a reasonable prediction where the price of gold is headed. Let's explore. US dollar is a safe haven asset. I have some reservations to this statement, but this is a prevailing narrative, so we will just go with that. As we all know, we are living in one of the most volatile times in the last couple of decades. National economies are stretched to the point of breaking due to shutdowns, supply disruptions, military conflicts, excessive debt and so forth. The uniqueness of this moment in history is that this chaos affects the entire world. No country is immune. In the past, most of the crises we localized. We have seen hyperinflation in Venezuela and some other developing countries. We have seen economic sanctions on Iran. We have seen use of US military in Middle East and many other local events. But the extent of the effects on the global affairs was minimal. Fast forward to today. Recent military conflict in Europe affects virtually everyone. Whether directly through actual kinetic warfare or through second-level effects of rising inflation, destruction of the existing economic, political or military world order. The point is, there are plenty of reasons to consider moving assets out of the national economies and into the more secure forms of wealth. Now, again, many would argue about relative safety of US dollar, but it is a discussion for another time. It's a historic fact that in the last few decades, international capital was flowing into the US during challenging times. Another reason US dollar is so strong at the moment is the monetary policy of the Federal Reserve. By tightening monetary supply, US is making dollars worldwide scarcer, forcing international players to compete, hence pushing dollar higher. All that dollar-denominated debt has to be paid back in dollars, so demand is surging at the time when supply is tightening. Also, higher US interest rates make investing into US assets more attractive. Let's consider the situation on Japanese bond market. Bank of Japan caps the rates on 10-year bonds at 0.25, while US bonds of similar duration yield over 3%. Japan is an interesting case study or what is to come. They were the first to embark of massive money printing strategy and now first to face the consequences. I wouldn't be surprised to see a massive devaluation of the yen if the energy costs remain high. But back to the topic. So, this combination of safe haven status with monetary policy pushed dollar to the highest levels in the last 2 decades. Now let's consider the situation with gold. Fiscal policies of the United States, as well as other governments of the world, created all the right conditions for a solid bull run in commodities in general and in gold in particular. Rapid expansion of monetary supply usually leads to re-evaluation of the commodities, especially monetary assets such as gold. Gold has been historically a hedge against currency risks over the long run. Short term the price fluctuations are unpredictable, but over the long term, we can say with high degree of confidence that gold preserves purchasing power. As we all know, higher interest rates and strong dollar tend to suppress the price of gold. DXY just hit 105 the other day and it is the strongest since pretty much 2000, when it hit just over 110. Another factor affecting the current performance of gold is a broad stock market decline. During financial crises and stock sell-offs, gold tend to go down with the rest of the assets. Although it usually recovers fast and makes new highs afterwards. Given a current deep decline in stocks, the fact that gold is almost flat for the year tells me that it is just gathering momentum to expand higher. If an asset shows resilience at the time when it is expected to drop, it is a positive indicator. When conditions change for the better for gold, I wouldn't be surprised to see a sharp repricing upwards. Now, to why I think the strength of the dollar is a great buying opportunity for the gold at this time. Take a look at the charts of gold, priced in currencies other than dollar, courtesy of Y charts. First, Japan. Since January, gold went up by 25%. Let's check the price of gold in euro. Again, since January, prices went up substantially. Gold in Swiss franc went from 1645 to 1808 as this recording, showing almost 10% rise since the beginning of the year. So, we can see a broad increase in value of gold worldwide. There are some exceptions, but generally speaking, gold performed as expected in the inflationary and unstable environment. However, what do we see in the United States? The price of gold is basically flat. That begs a question. Is there an opportunity for the arbitrage? If almost everywhere else in the world the price of gold went up in the local currencies, shouldn't we expect a rise of gold in US dollars also? The answer is not that simple. Short version is, it depends. You can think of dollar to gold ratio as a currency pair. If dollar is going up in value, gold should be coming down in relative terms. So, at the moment, the strong dollar covers up the true value of gold. As we all know, the strength of dollar is a relative term. It is a mathematical abstract based on the weaknesses of other currencies. To put it another way, if the dollar is very expensive or strong, it can buy more stuff. Any stuff. Gold is just another kind of the so-called stuff in this example. Just another way of visualizing possibilities of the strong dollar. But what will happen to the price of gold if the strength of dollar to decline? Wouldn't it be reasonable to expect for gold to reprice upwards towards some form of worldwide average? Again, the world of finance is a very complicated place and gold prices are greatly affected by many factors that we simply cannot predict. However, let's take a look at the dot-com bubble of 2000. Check out these charts. The dollar index was at 110, just few points above where we are today. Gold was trading in a $400 range per ounce. There were many similarities to what we are experiencing today. As dollar drifted lower over the decade following the dot-com bubble, gold just exploded to the upside. As we can see, there is a lot of potential, and today's situation can lead to a similar outcome. What's also important is the level of the inflation and the level of leverage in the system. That can make the previous bull run in gold pale by comparison to what is to come. As we can see, there is a very reasonable case for gold to head much higher in a near future. If the past is any guide, 5 times or more increase over the next decade is a very real possibility. I will call it a day here. As always, thank you for watching, and if you like this video, please subscribe and like. As always, you are welcome here. I am not a financial advisor. Everything in this video is just my opinion and should be treated as such. Until next time.